Hey there, YouTube. This is Tyler from Augury Research. I have a video that I kind of wanted to post about information bias. I think this is very paramount to investing. It's really, really crucial if you want to have success. Understanding information and how it works and how there is a bias behind it can be very beneficial to your investing. So one of the questions that a lot of people ask me is like, hey Tyler, how do you know if it's a good investment in 15 minutes or less? Because I sometimes say that, and I think this lesson will help you understand that. But the reason I developed this lesson is because of the short reports that go out. You know, as you guys know, I do a lot of short selling, and I think what is key to successful short selling is understanding information and valuing that information. And how do we value that information? So in this video, I'm going to go through that. Without further ado, let's get started. All right, so I tried my best to develop this lesson to help you understand fairly simple how this works. So the goal here is to let's learn how to value information. So first off, we need to know what is information. And information measures the uncertainty we overcome, right? Our chances of learning something new. And that's really important to think about. The messages that resolve the greatest amount of uncertainty are the richest in information, right? So whatever, how much we didn't know, if we, flip a switch there, we unlock really, really rich information. Redundancy is the part of every message that tells us nothing new, right? And this is where I'm kind of getting at with the short reports, is that they're filled with all of this information, but they're very, very redundant. And one of the things that happens is, which is natural human behavior, is someone reads that report, they think that this information is really, really important, and they, put on the same trade as the short report. And then what happens is the people, chase the short, then they end up getting backward. And I know for myself and in my short selling, one of the things that I always do is if someone puts out a short report on a company that I'm short, I have to cover, because it completely changes the dynamic of the trade. And now, they're revealing their position. They're usually overside. They think they have a really, really good idea. And then you get, crowds like Wall Street Bets or, people on Twitter. They read these things and, it unlocks, I guess, valuable information in a sense for them. So they take the opposite side of it. Next thing you know, the person's trapped, they're short, and the whole thing turns into an absolute mess where you have parties that are, now getting emotional. People can't let go of their biases and just admit that they're wrong, right? They start arguing with the stock price, the movement, yada, yada, yada. It turns into a big mess. Completely another story for another day. But to understand information and how it works, I think the easiest way is to play a game of hangman, right? So I put together a code or a message. Oh, can't zoom out here, but I put together a message, and what this exercise is going to do is help you understand how information works and how information is valuable in the as we unlock pieces of this puzzle. You'll start to notice that towards the end, once we have a couple letters on the board, the new letters are no longer valuable because we can guess the entire phrase without having every single, little one of these blocks filled up, right? So to get started, we're gonna, I'm just gonna guess a letter. I will guess E, since that is the most used letter in the English alphabet. If you guys did not know, that is the case, right? So we have an E here, we have an E here, and we have an E here. We have an E here, and no more E's. Okay, well that gives us a little bit of information. We still probably cannot guess the phrase, but we might have an idea maybe as to what this word is. So, if you guys don't know, The is a very popular word in the English language. So let's guess H. And what do you know? We have an H on the board. We actually have two H's on the board, right? So this unlocks some information. I think we can easily guess that this is going to be a T because we're looking like we are right there. And then we do have another T right there. That was a pretty bad T. Bam. Okay. So we're on the board here. We're actually starting to get this ball rolling. Let's guess the letter S, since that's a pretty popular one. And ding, ding, ding. Okay, that unlocked a lot of information. So that was a valuable guess, right? Now, I don't know where you guys are sitting here, but now we can start to really understand what this is going to say. So with each letter that we guessed, each one of them had a certain value to it, right? That E had a lot of value because it knocked down a lot of uncertainty. The S had a lot of value because it knocked down a lot of uncertainty. We probably didn't know what this word was. We probably had no clue what this word is. But now that we have that S, that was a packet of rich information. And now we can probably guess what this phrase is, right? Squeeze the shorts. And if you didn't know, you could probably guess O, or whatever. And I think what also is interesting is in life and in business and in investing, there are these rules. There's these rules that help us, gain, information. So one of the rules in the English language is, after a Q, what comes after a Q? A U. So if we unlock that Q, it's kind of like a little, we know that a U is here. And then, okay, now it's becoming very obvious what this phrase is, right? Like I said, it's squeeze the shorts. And this is important, right? I hope that, little exercise demonstrates how valuable or how the value differs between packets of information and what becomes redundant, right? If we're sitting here and we know, this is redundancy. After Q comes U, we know that. So it's not like guessing Q after U is really that valuable. We knew a U was there. We don't have to put it on the board to know after a Q comes U. So you don't have to, if you're trying to, get this in as least amount of moves as possible, you wouldn't guess Q, or U rather. You would just say, oh, I know that this is probably going to be a U, very, very likely. And let me try to, guess an R here, an O, and whatever. Okay, so hopefully I'm not making this more confusing. And this is information bias. So I'm going to I put some notes down here as to what I think information bias is. And it's drowning in information. And that's what these short reports do. They drown you in information, but the information that they're giving you is really not that important, right? Because what you need to do is you need to start building a hierarchy of what's important. So one of the things that I learned in college is when you want to build a winning baseball team, right? How do you do it? Dominant pitching, timely hitting throughout the lineup, hitting for power. Then, maybe all the way down at the bottom, like of that lineup, of that hierarchy is like the ability to steal bases. It's like, okay, well, stealing bases doesn't really make a championship team. It might be a little bit of importance, but we don't necessarily need it if these other factors are, hitting right. Okay, so this bias causes you to lose a sense of priority. So you can't prioritize the information. When you read these short reports, and usually they're lengthy, they're like 40 pages and they're filled with interesting stuff, but that information is really not that valuable. So inability to decipher which facts are important, which problems and which details require the most attention. And you always need a mental filtering system, and it has to be based on a scale of priority. You have to understand what's important here. So one of the very noticeable things that I read a short report and I go, it always gives it a price target of 0. So the other one done, the one done the other day on Sava, it's like price target of 0. Well, I quickly pull up the balance sheet and the income statement, the cash flow statement, and the company's got millions and millions and millions and millions of dollars of cash and no real liabilities. Cash burn is fair, and let's just, it's not likely that the SEC is going to come in this quick and, next thing you know, hammer these guys with lawsuits, drown them, right? It's probably not going to happen like that, or the chances of that happening is fairly low. Don't get me wrong, that, that maybe should happen here, but the chances of it happening timely, look at Elfin, look at some of these other big shams that have been out there. So, there has to be a mental filtering system, and you need to understand what's really important. And in the game of money, it's all about money. Too much information can lead to mental fatigue, confusion, and destructive decision making. And this is where I really go in. And this is why I'm, when I know I have a good idea, I can tell you really, really, really quick. Because the business has a ton of cash on the balance sheet, no liabilities, has a good product that has great margins. Like, these things add up really quick. Then they, give me the most amount of really, really rich information. And then lower down the list might be, oh, there's a low integrity person inside the business. Don't get me wrong, management team is on the priority list, but and let's say we have if you find a business that has $1 billion cash in it that's trading at $50 million and there's no cash burn, there's no liabilities, and there's a good chance that you get that cash, it doesn't matter who's the CEO. It doesn't matter. Like, that's the hierarchy. You have to be able to weigh these different factors. So in the end, to conclude, is that you really don't need to know all the details to make good decisions. Just like our case up here, you can eliminate, you can probably eliminate you can probably eliminate all of this, and you might be able to guess. You might be able to guess what it is. And if you can, that means you're right, and you did it. You did your job. Your thesis was right, and you didn't have every box filled in. And in investing, you don't have to know everything about the business. Yes, sometimes it helps, and yes, sometimes you can unlock very valuable information by doing some really deep, thorough research. The problem is that when you do that deep, thorough research, it has to convert to cash, because not everybody is going to be at that level. You might be years and years early, and you might think something is really, really important right now, and it might be really important, but if the market doesn't learn about it for 3-4 years later, then the value isn't unlocked until that time. Whereas if it starts printing the business extra cash, people start noticing that cash, then the value is unlocked a lot quicker. All right, so if this video helped you guys out and you made it all the way to the end, be sure that you like this video, subscribe to our channel. We're going to be posting a lot more stuff on investing, biases, lessons, everything that you're going to need to hopefully get better at investing and, achieve your goals in life. We're going to be posting. And if you want to learn more about Augury, make sure you visit our website at auguryresearch.com. And until next time, happy trading.